Hey, what is going on, everybody? It is Rob Payon, aka Crypto Bobby, and here for I think the second edition of Crypto Happy Hour now since I have been back. If you can hear me all right, let me know. Still getting the hang of kind of the new-ish setup that I have. Hope you all are having a great day, great night, wherever you're watching in from at this point in time. For me, just finishing up work. It's 5 p.m. Eastern time, so figured I'd pop in here and just chat through what's happening a little bit in the market and talk through some of the things that are happening at this point in time within the space. Obviously, a lot going on, quite a bit of good, fun things that are happening right now. The market reacting for the better at this point in time. So a lot of good stuff to talk through. So we should have a good time for sure in this one. If you are watching right now, if you're drinking anything interesting, let me know. I'll probably talk about this because somebody will inevitably comment and call me a drunk fool because, hey, it's Crypto Happy Hour. But I have the Athletic Brew Irish Red because I don't drink during the week anymore, and it is, in fact, a Tuesday night as of the time of recording this, if you're not on planet Earth. So, yeah, I'm going to drink this because it kind of tastes like beer, and it makes me feel like I'm drinking, even though I'm actually not. So, you take it, and hopefully I'll be skinny because I'm not crushing beers anymore. Like 5 years ago when I used to come on here every single night and just crank beers and talk about this stuff. So we're drinking a Athletic Brew non-alcoholic because I am now well above 30 and a baby back bitch. And if I drink a lot of beer, I'm going to get fat and bloated and gross. So, hey, cheers. So, a couple different things to talk about today. I want to talk through, obviously, your questions. So I'll be shooting the shit with you guys. If you have questions or you want to make fun of me, go for it. Let's have a good time. But I want to talk through a couple different things. So we'll talk about GBTC a little bit, what's happening there, because I think that was the big news last week and still kind of is at this point in time, but somewhat maybe a little bit overblown, or we're kind of getting past the point of it being overblown. And that is obviously a nice thing because good old Barry is no longer nuking the price of our coins. Also want to talk through speaking of ETFs, we could talk through the Ethereum ETF. Talked about that a little bit last time, but we'll talk through that. We'll also go through just the sizing of bets. Will Clement posted something, it was an article from a couple of years ago, but I think a good article around sizing bets in your portfolio. And I think why big concentrated bets are kind of the preference in a lot of ways. So we're going to talk through that. Shout out to everybody who's already in the comments. What's up, James? What's up, Christopher Abbott? Hidden disclaimer, Bitcoin dump incoming now for sure. Well, only one way to find out. Let's see what's happening at this exact moment, and I'll pop over. Let's see here. There we go. So yeah, right now, no, we are not getting a Bitcoin dump because I am streaming. Could not be the case. We will see if that's actually happening, but that is it's not happening yet. So we'll see if this is 2018 all over again or not. But yeah, I mean, a couple different things that are occurring right now, and seeing some chatter around airdrops, which I think is also interesting, and I think a lot of folks are, thinking about kind of how those might shake out and what that's going to mean, and so we'll talk through some of the airdrops that are happening at this point in time. There's a big one tomorrow with Jupiter on Solana. We can talk through Solana. I see Eigenlayer at this point in time from Christopher Abbott. I see somebody else, Big A, saying they're trying to farm the hell out of Eigenlayer as well. And I think airdrops are interesting. And there was actually a really good tweet today that I can pull up and talk through. So we'll get through a bunch of that too. So I'll actually pull up a tweet. Maybe before we even hop into Barry, we can talk through this tweet because I thought it was a pretty good one. And maybe a little bit, I think Jason went pretty far deep into the love the meme. He's not unemployed. He's an airdrop farmer. But so Jason Choi, good follow on Twitter. I'm sure many of you already follow him, but a VC in the space. And so speaking of airdrops, He says airdrops went from rewarding early users during the Uniswap days to being a magnet for leeches masquerading as quote unquote community members. Entitled leeches create noise on public forums to pressure teams to give out free money, then hop to the next project once they get what they came for. Point is the revenge plot from founders tired of being bullied by anons, a way to farm their leeches. Both do little to grow adoption. Yeah, so it's a really interesting point because if you go back like historically, I think that was also one of the big reasons why Uniswap's airdrop was so successful was because no one really saw it coming in a way. I think it was hard for people to game, and nobody really gamed it because nobody necessarily saw or thought that it was coming. And when you have that as something occurring, then you have all these people that are just gaming, as we see all the people that are talking about, the amount of money they've gotten from airdrops and things like that. I think, where you frankly make the most money from these is when you're just genuinely using a product and it is a situation there where you're genuinely using the product, you like using the product, and you just so happen to get that airdrop retroactively. I think a lot of times when people are expecting an airdrop, you have all this shit on Twitter now of, the airdrop farmers or use these 50 projects to make money, etc. And yeah, you might make some money and that's sick. And honestly, probably a really good way if you're starting from nothing or like basically bootstrapping yourself, and they're like, you can hustle your way to money on airdrops for sure. You can hustle your way. And I think that's an awesome thing. Like there's always going to be money in the space. But the times in which you have an airdrop where it's super highly anticipated and all these people are farming it and trying to game it, usually those get sold off because there's just not organic users. Like Zach mentioned getting 18 Gs from the ENS airdrop, which is A, sick, but B, like, you sign up, you buy an ENS name in 2019 or 2020. You weren't necessarily doing that because you're like, hey, I'm going to get an airdrop. You're just buying an ENS name or multiple because you're like, hey, this is cool. I want this, want this Ethereum domain. And so that is, I think, like for a lot of cases, like those are ones where you do really well. Like perhaps you were using in margin trading on DYDX in 2019 or 2020, and you got a fat stack of DYDX tokens. You were just trying to trade on a decentralized perp exchange. You weren't necessarily trying to, game an airdrop. I think those are typically where you do pretty well versus these super highly gamed ones. So I do think like now we're kind of at this point where I'm not going to say airdrops are like bad or anything like that for you, perhaps as a, investor in these, in these things. On the flip side though, I think that it becomes like in the bull market when everything's super anticipated and all that type of stuff, sometimes it just becomes a little bit more difficult in that line of, doing things. But again, I think if you are like somebody who's just like starting from nothing, has a very small portfolio in crypto because you're young, you don't have a job, or you have a low paying job, whatever the heck it is, or you're old and you just don't have money, it doesn't really matter. If you're starting from basically nothing, I think the kind of, I don't want to say, I guess airdrop farming is the term, but airdrop farming, airdrop hustling, like whatever you're doing in that, you're kind of putting in the work to get it done. I do think that that's probably a decent path, frankly, to take. But who knows? And so that I thought was a good conversation, or just like good tweet, because you have a lot of like crazy public pressure, and frankly, like most of the time these airdrops like don't work out that well. There are a lot that haven't really done that well, either for the the investors or for the teams themselves, but it's still something that people do because hey, money is dropped out of thin air. So switching from airdrops, although we can talk through more stuff around that, but if you have questions, again, feel free to shoot me a note in the comments and I will answer those. So James Seyffert, I'm sure many of you follow, just going through the whole ETF, GBTC type stuff. Today is an interesting day, and it's gotten pretty interesting in the crypto realm because the big boogeyman, the big monster in the room, frankly, has been GBTC. That has been what has, whether or not it has been the exact reason that Bitcoin sold off really last week. Whether that was the exact reason or not, that was kind of the scary monster in the room. And so we're at a point now where I've like joked on Twitter a bunch of times where I've say, Larry over Barry, or Larry greater than Barry, Larry Fink greater than Barry Silbert. And that is like very quickly becoming a thing. And so you have right now a situation where GBTC is rapidly losing AUM, but frankly, almost even worse than that, it's losing volume. It's missing out on volume against IBIT and Fidelity. So if you're not paying that much attention, one of the things that happened was Greyscale was the trust, Greyscale, the Bitcoin trust, Barry Silbert, they were the only game in town. And so because they were the only game in town, they could charge 2%. And because it wasn't an ETF, there wasn't a ton of competition, they could charge 2%. So they had $30 billion of assets under management. So on that 2%, they were making $500-600 million a year on GBTC. Then what happens is you have these other ETFs that eventually get approved, which is funny enough or ironic enough. The only reason that the BlackRock ETF and the Fidelity ETF really ended up getting approved was because Greyscale sued the SEC and won that version of the court case. So Greyscale sues the SEC, wins, and ends up kind of shooting themselves in the foot because that's the only reason why these ETFs get approved. And so just from listening to the people that are much smarter than me, and I'm kind of not regurgitating this, but I'm kind of sharing what my general understanding of things is Greyscale drops their price from 2% to 1.5%. Sounds okay, right? Well, the problem is the vast majority of all these ETFs that were approved outside of Greyscale, IBIT, Fidelity, ARK, Bitwise, all these other ones, their fees are basically anywhere from 20 basis points or 0.4 to 0.2. And most of them have some type of discount for the first 6 months or if you're doing a ton of volume. And so the theory from some people, or at least it sounded like from James and some of these other Bloomberg guys and just the ETF analysts, was, hey, you know what? Maybe Greyscale and GBTC is not going to become they're not hoping that it becomes like a widely held ETF in the sense of people are going to buy it and hold it for a long amount of time because of the price. They're hoping that traders are going to use that for liquidity, and it's just going to be the highest volume ETF. And because it's the highest volume ETF, they're still going to make a ton of money on those fees over time. Well, that might not be the case because you're starting to see both the BlackRock ETF IBIT and the Fidelity ETF FBTC. Those are really creeping up in volume quite a bit. If you combine the two of them, they are really well outpacing GBTC at this point in time. But if you look at like BlackRock next to GBTC, it's getting there and it's getting there. And as BlackRock gets more AUM, it is a very strong possibility that GBTC loses out not only on all this AUM that it had, but it also becomes not as relevant of an ETF because less people are trading it than the BlackRock or the Fidelity ETF. So something to keep in mind is just that volume. I think that's a really important thing. Is what do traders like? What is Wall Street? What do they end up going with? My gut, and I think anybody's probably with a brain that's functioning right now, is probably thinking that BlackRock's going to win again. Larry over Barry. I think just betting against Larry Fink and the largest asset manager in the world versus Greyscale. I think I'm going to bet on BlackRock to win that bet, but we'll see exactly how that ends up panning out. And again, if you guys have any questions, if you're drinking anything interesting that is not a non-alcoholic beer, let me know in the comments. If you're enjoying this video, make sure to hit the thumbs up, the like button. I don't really even know what it does anymore, frankly, but hit it because why the hell not, right? And if you have any questions on the ETF stuff, let me know. I'll do my best to pretend like I know what the hell I'm talking about. And so speaking of these ETFs, one of the things that happened today, and we can actually go and we can look at the price of ETH. If you look at when this article was published, it was kind of funny. What do we have here? This article was published around here. So shout out to the block for pumping me bags. But so one of the things that happened today was this article from the block came out where Standard Chartered Bank said the SEC was likely to approve spot Ethereum ETFs on May 23rd, which I believe is kind of like the final-ish deadline for really the January 10th version, or I think it was January 10th version of when for Bitcoin. That is May 23rd for Ethereum. And so I don't think this was frankly any real new news. It basically just said Standard Chartered Bank believes that there's going to be an ETF, and they got an exclusive on that. And so there's really nothing new about this. I think most people that I listen to, from what I have heard, there's really, frankly, no reason to believe that an Ethereum ETF won't be approved. My understanding of things is that the kind of the timeline or how the Bitcoin ETF was approved was Greyscale sued the SEC because they claimed that there was adequate supervision over the futures ETF market, which there is for two assets. There is a futures ETF for Bitcoin. There's a future ETF for Ethereum. And so from my understanding, Greyscale sued because they said there's adequate supervision over futures, so there should be spot. And the SEC lost that. And so then they approved the spot Bitcoin ETF. Now, again, there's only one other asset out there in which there is that has a futures ETF in crypto and does not have spot, and that's Ethereum. And so from my understanding is that you're most likely, really very likely, going to get an Ethereum spot ETF, sounds like sometime in May, that being the deadline. And then anything else possibly in the future is going to be probably quite a long bit away because nothing else has a futures ETF. And I doubt the SEC is probably, unless there's a regime change or something along those lines, going to approve another futures ETF for something like Solana, or I don't know what else there would be, but my guess would be like Solana would be kind of like the main one. But so that is kind of Ripple. Who the hell knows? Maybe Ripple wins their lawsuit and they get their ETF. But my understanding is it's not that it's 100% a done deal, but it's pretty damn likely. So it'll be interesting to see how this pans out. But just also funny how headlines in the crypto space like this, people still argue about the efficiency of this industry or how good or not good the crypto space is, or how like you still can make a ton of money just based upon silly headline news. It is really still an opportune, rich environment because there are a lot of people in this space that are just not either paying attention to it full time or what have you. So I think it again goes to show that if you're paying attention to this stuff, the market still moves on headlines, and it stayed moving on a headline. And whether or not the headline actually means anything at all, kind of irrelevant because the market doesn't necessarily care. So a couple questions in regards to the ETFs. So somebody mentioned, last time I looked at the ETFs, Grayscale's fees were about 5x all of the others. Why would they price themselves out of the market? And it's a good question. And it's kind of they're kind of in a damned if you do, damned if you don't type situation where Greyscale, like I said, they had, I don't know the AUM off the top of my head, but an AUM, I'm being all fancy, assets under management. I don't know the assets under management off the top of my head. But so Greyscale had, let's say, $25 billion in assets under management. When GBTC was the Greyscale Bitcoin Trust, when it was just a trust or when it was not an ETF yet, you can go to certain brokerages and you could buy it traded OTC. Like I could buy it out of my Fidelity account if I signed some type of waiver, which I did. And so you could do that. But that said, because they were the only game in town for this type of stuff, or the only primary game in town, they charged a really fat fee. They charged 2%, which is obviously a lot of money. And so they charged 2%, and they were making, again, like on $25 billion in assets under management, in just GBTC alone, making $500 million a year in fees off of GBTC, which is a fucking cash cow. Like, you're making $500 million. That's a lot. It's a lot of money you are printing. And so when these ETFs happened, what is the option? Because you have BlackRock at 0.2% or 0.3%. You have Fidelity at like 0.2%. All these people immediately come in and uppercut you because it's kind of a race to zero. When all of these ETFs essentially do the exact same thing, what do? You just charge less money and then you get more assets under management. It's somewhat simple, right? So at that point in time, you kind of have two options, I guess, as Greyscale. It's like you can cut your assets. You can kind of do really two things. You can cut your fees from 2% and make them as competitive as everybody else. And you could say they were 2%, we're going to cut them by 90%. And they're going to now be 0.2%. So our revenue is now going to go from $500 million a year to $50 million a year. Or alternatively, what can you do? You can drop it to 1.5%, which they did, which is, again, 5 times more than I think the worst rate out there, close to it. And you can hope that either people are lazy and just are holding GBTC and not realizing it, maybe in the retirement account or whatever, they just don't know, or maybe they bought it really low. I think this is somewhat common is, hey, you bought GBTC in the past 2 years, maybe around the time of the FTX puke or whatever have you, when it was a 30-40% discount or however low it got pretty damn low. You bought GBTC at a massive discount and rode that wave all the way up. Now you're sitting on pretty fat capital gains taxes. And so you might be sitting there waiting for those short-term cap gains taxes to go to long-term cap gains within GBTC and don't want to sell it yet until you can do that. So those are kind of the things. It's like either do we want to cut our rates immediately and go down to the competition, drop it by 90% and lose 90% of our revenue, or do we want to keep our fees high and our AUM is probably going to bleed out over time, but maybe not go down 90%. Maybe it goes down 50% or 60%, but I guess we're making more money than we would have if we just dropped our rates. And so I think that's frankly why they did that, is they think they're going to bleed less money by doing that than something else. Hidden Disclaimer says, can you elaborate on ETFs a bit more? How does the price actually correlate with spot Bitcoin? Because they don't seem to move the same. Also, what happens to, say, the Fidelity ETF if the BlackRock ETF, quote unquote, wins? So I think there's typically, I think the comparison a lot of people have, and this is, again, me listening to like the Bloomberg guys who are much smarter about this shit than I am, but there is usually more than one ETF within this race. So it seems fairly logical that like we're going to have Fidelity, we're going to have a BlackRock ETF. Now, the other ones that you can look at and say, I don't know about, like you have in this situation, you have the Van Eck, the Van Eck Twitter is on fire, but the Van Eck ETF is doing $2.5 million in volume. So, my shitcoins that I buy do more volume on that on Uniswap. So tough scene. Valkyrie, I mean, the ticker symbol's bad, and so is that. So, but Valkyrie doing 1.8 mil, Franklin Bitcoin ETF doing 2.7 mil, like those. And again, I have no knowledge of whether or not these actually will go anywhere, but you would think that there is a decent likelihood that something along those lines will cease to exist at a certain time, at a certain point, because it is no longer profitable for the company to basically maintain. So we'll see if that actually happens, but you're starting to clearly see leaders emerge in this space. I think the big ones obviously are going to be BlackRock and Fidelity, and then to a lesser extent you have ARK and Bitwise. I'd love to see Bitwise succeed because they are like a crypto native OG kind of TradFi crypto native crossover, I guess, if you will, and they're good people. So it'd be cool to see them succeed. But yeah, right now it really looks like it's kind of a two-man race, frankly, between BlackRock and Fidelity. And I think that makes sense considering all of that. Somebody says, do you believe a staked Ethereum ETF will be a third with a dividend? I have no clue. I mean, I'm 100% guessing here, and I have no idea, but I would guess that you get an Ethereum ETF that has zero dividend based upon staking. So whoever is running that ETF, not only are they going to make some money on fees, but they're also probably going to be keeping the the staked Ethereum, if they are even staking it. They may not stake it. So who knows exactly how that'll pan out. Maybe they can't stake it. But I guess that'll be interesting to watch and see. I would also, and this is again, like I have no inside information. I am not a Bloomberg ETF analyst, but it was interesting to see the debate and the issues between the in-kind and the cash creates. So I would highly doubt there's going to be a lot of involvement within staking within crypto. It would be, or within an Ethereum ETF, it would be pretty sick if you could stake your Ethereum ETF did pay you a dividend on like a monthly or a quarterly basis or whatever it might be. That would be awesome. I would love that, but I doubt that, at least in the near term, that is something that would happen. And Zach kind of clarifying, saying they won't stake, they use Coinbase custody. Eric, what year is this? Bobby's back. Well, I believe it is the year 2024. I am back. I did never leave crypto. I just got tired of YouTube, but I'm back. I'm here having a good time. If you are enjoying it, I'm just shooting the shit. We're having a good time. Not here to do anything crazy. Not here to try and take over YouTube. Just having a good time. Want to chat with people that are interested in this shit, because I think the space is fun. I've thought the space is fun for a long time, but now I'm just having a good time. So fuck it. And so this is an article that I can post a link into the comments on. So I'll put this link in the comments. And Daniel B says, what did I miss? Did we scream flip from the rooftops yet? Good to see you too, Daniel. I have not screamed it from the rooftops yet, but I remain very bullish on Chainflip and Flip. It's one of my biggest bags this cycle. It is what it is. It's having a good day today. It hasn't moved massively from where I got it, but you know what? I'm in it, and I got a pretty strong thesis, and I think I'm right. Either I'm really early, and either and we'll talk about this because I think it goes into this kind of just overall investments, this investment thesis in general, or just generally sizing. And so I posted a link there. This is a good article around sizing your bets and kind of taking some components from, I think, really successful investors in the trading world. It's kind of funny because when I think about investing in crypto, I'm less of I feel like I try to, in my head, cross between a quote unquote trader and a venture investor. Because I think for me, in terms of what I like to do, the biggest wins for me and the less stressful wins are where I like to buy spot positions. I just buy in the open market. I'm not like a venture investor. I'm not like an angel investor. I like to buy in the open market. And I like to go in with size because for me now, I need strong conviction in something. If you are able to stomach the fluctuations within the crypto space, I think you need to really have strong conviction. And where I mess up is when I buy something because somebody told me to buy it and I don't have any conviction in it. Sorry, I'm burping from friggin' beer, or non-alcoholic beer. It's not even real beer. But when you talk about this article, it goes into really long-term returns. And so they say, to get really big long-term returns, you have to be a pig and ride your winners. When he lacks conviction, he reduces his leverage and takes off his bets. And so I don't trade with leverage, so not necessarily applicable. But when I lack conviction, I'll take off the bet. I'll go somewhere else. I'll do something else. I need to be convicted, or I need to have conviction in a bet. But when I do, I size really, really aggressively because frankly, I would rather own 3 bags that I'm super, super passionate about, might be a word, but passionate about, have conviction in, whatever it is, versus there have been times, I'm sure some of you guys remember back in the day, it's I had a portfolio on my website and it was 10 different things. And I had conviction in I had a thesis around some of them, but I didn't have conviction in them and I wouldn't hold them through all of the ups and the downs that I could. And so for me now, I like to go in with size and maintain that level of conviction. I think that's where you can really benefit from reading this article. I mean, it talks about risk management and trade management, and admittedly, I'm not always the best at that either. Like sometimes I think I probably size too aggressively, but I also don't trade with leverage, so it gives me a little bit of comfort on things. Going through some of these questions too, hidden disclaimer, how do you feel about base chain? Coinbase's chain, yes. I think it's going to be big like BSC or nah. So base is an interesting one. I think the joke back in the day was it was like BSC for like BSC for white people or something stupid like that. Like it was again, don't shoot the messenger. But that was like the joke on Twitter. And it is funny in many respects. I think it's interesting because distribution matters. I forget who tweeted it. I saw a tweet yesterday that was in regards to BSC versus like Arbitrum and Optimism and a lot of the big hyped L2s. And with those hyped L2s, BSC is still overtaking basically all of them. And so I think that is kind of interesting. And the point of the discussion was that BSC has distribution because Binance is the largest crypto exchange in the world. And the other L2s, like the Arbitrum, obviously they have a good degree of distribution, but they are not the largest crypto exchange in the world, so they can't just pump users into their platform. And Coinbase has that luxury. They're not Binance. They're obviously different than Binance, but Coinbase is a damn big exchange and successful exchange at that. And so they have a massive advantage in growing the adoption of base chain. And so I think with that, it will be successful because distribution does matter. Having the marketing engine, having the ability to change the features of the withdrawal or like basically a million different things you could do for user acquisition from Coinbase.com to funnel people into Base. There is a lot of things that they can do there. And so I guess a couple different interesting notes on that is there isn't a Base coin or there's no Coinbase coin. And so I wonder how that affects things in a positive or negative way. It's built on Optimism, and so I think Optimism in the past and has benefited from those features, which is great, and it's wonderful to see. But like, did BSC do really well because it was also associated with BNB and like you had a direct token lot? Like, I guess the thing that I don't know is, are people going to be less interested in Base because there isn't a main like L2 token that they can buy and pump essentially? Like, yes or no? Who knows? We'll see exactly what happens. But because of the distribution, at least one of my buddies has an opinion that there's going to be a Coinbase, or there's going to be a base season, and usually these L1 kind of things go through seasons, and whether or not it's sustainable, I don't know. But obviously that distribution should be pretty interesting for sure. It's not an official comeback until Doug Polk returns. Doug's a man. I mean, I think he's just crushing the poker world. I still follow him on Twitter and interact with him every once in a while. He is a good dude. I mean, I'm the dumbest person when it comes to poker in the world, so I don't understand like when there's a huge crossover between, I think, like crypto people and poker players, because I guess there's a lot of there's just a crossover in terms of like how those people think and interact. And I think, outside of Doug, there's a lot of like VCs that have kind of gotten started in the poker space, playing professionally, and moved into crypto, or traders doing the same thing. So that's an interesting world. And frankly, I have no clue in the poker space, but he seems to be still around and crushing it, just not as much in the crypto space, and just doing his own thing in the poker world. So also lost a ton of weight back, a little while ago. That was awesome. That was cool to see. I remember he posted a YouTube video he had a sick transformation. So good for him. So Big A says 2018 was a different time though. Every new coin ICO was a 100x chance, so it was worth throwing a little at everything. So yes and no. I mean, yes, 2018 was a different time. So was 2020 and 2021. And now where we're at right now in 2024. I think obviously like things changed. The more things change, the more they stay the same. And I think you had ICOs back then where you could send money to an Ethereum address, get tokens, and those things usually pumped in pretty quick, short order, and that was a crazy season. That was nuts. That was a pretty epic time in the crypto world. But on the flip side, for me, at least when I think about this stuff, it's still the same. Like there are still coins that are 100xing and 200xing and 50xing and 10xing. But like when I think about those things, and this is just for me. This might not be for you. You might think totally the opposite. I think those opportunities for 100x's are still out there, and they are going to continue to be out there in 2024. I think that there is still time for that to happen, and that will happen in a positive bull market, which I think we are going to. Kind of going to the title of the happy hour. It's like, don't overthink it. I don't think you need to overthink what's happening now. BlackRock and Fidelity are going to dominate. Greyscale is going to lose over time. You have the Bitcoin halving coming up in April. The macro environment looks pretty favorable for crypto. I think they're probably going to ease on rates in the very near future here, or somewhat over the course of the year. And I'm not a macro expert, but like the macro stuff looks pretty decent right now. So with that said, I think there's going to be opportunities for 100x. But when I look at 100x, like if I put $500 into something that 100x's, yeah, it's sick to make 50 grand. Like that's cool. But at the same point in time, is it going to like retire my grandchildren? No. If you put 10 grand into 100x, is that going to do something? Yeah. If you put 50 grand into 100x, fuck yeah, that's going to do something. So it's like going in and obviously there's a balance there, because if you're putting that money into, if you're putting something into something that can 100x, there's probably a level of risk there. I mean, there's probably a shit ton of risk there, right? And so I think it's just figuring out like where you want to play, and also how comfortable you are like on the risk curve. Like everything I look at in crypto, I kind of think about with that lens of like, where is this on the risk curve? Like how risky is this? Is it on a scale of like Bitcoin to the sub $1 million market cap coin that is maybe a rug, maybe not a rug? I like to definitely play in the middle of that. But usually, like I like to live between like the 10 to $100 million market cap coins, because I know they're probably not a rug. There's a bunch of other things that I really like about this area, but like I know they're probably not a rug because I've done my research on it, but they also still have that room to go up quite a bit. And I think that's important. It's still giving yourself that level of upside, especially when you are involved in this space. And so Zach makes good points. Says you have to prioritize growth versus wealth preservation once your portfolio reaches a certain size. And so I think there's I forget what it's concentrate to build wealth and diversify to like maintain it, something along those lines. I forget. It's Warren Buffett. No, I'm kidding. I think it might be a Warren Buffett quote, but with that said, I do think like you do have to bet big in concentrated bets to really in this industry do damn well. And then at a certain point in time, you can like diversify, or you can move things to less risk, or get out of the industry for a while and kind of chill out, which I've made mistakes of that before where I just haven't done that. And so I think like all of those things are okay. You just have to, it's frustrating sometimes because you have to build the personal experiences for yourself. And you frankly like have to fuck up in some occasions. Like sometimes you learn by fucking up, and that's life. It sucks when your fuck ups make you lose a lot of money, but that's life. So Eric says, do you think this bear market has been as harsh as 2018, 2019? I would say it's been different. 2017 and 2018, like, I mean, really 2018 was like January. It was like a couple weeks in January, but 2017 was nuts because it was like a massive, massive bubble, and there was a lot of smoke and mirrors, and there wasn't a whole lot of like actual adoption of anything. Like the crypto space, there was a lot of, in 2017, there was a lot of promises that came out, whether it was like all these ICOs and things like that. It was just, there was a shit ton of promises that came out. In 2018 and 2019, I worked in crypto. Like I was full-time working in crypto at that point in time. I worked at AirSwap. I was a full-time employee. And it was a really interesting time to be an employee of a company in the space at that point in time, because it was like the meme of building during the bear market, where you're building a decentralized exchange that's getting like 10 to 50 ETH of volume a day or 100 ETH of volume a day, but Ethereum was like $80 or $100. So it was like, you're getting $100,000 a day in volume or $50,000 a day. Like it, and you're just trucking along and doing your best to make it through it. And I think a lot of people in 2018, 2019 were just like, I think this industry is bullshit. It's done. It's over. It's not coming back. And I think they thought that because there were a lot of promises that were made too early in 2017. Like people promised the moon, and there just wasn't enough time to really develop that. The bear market in 2022 and 2023 was different because I think the crypto industry at that point in time gained a decent amount of legitimacy. And when you had that legitimacy, it really like hurt when there were these blowups. And I think like these blowups were almost like, I mean, they definitely were like pretty existential in nature. Like the level of crazy shit that went on in 2022 and 2023 was absurd. Like the fact that you all hopefully are here and like alive and like have money left in your portfolio is probably a testament to some skill, to some luck, and just, good things. And I'm sure, many of us have gotten wrecked in multiple different ways, whether it was having money in Luna and UST, or having money on Celsius, or having money on FTX, like having money in Genesis, like any of these things, having money in Gemini lending, like all of these things. Like there were 1,000,001 different ways that you could have blown yourself up in 2022 and 2023. The shit that happened with FTX too, where, that was just insane. Like there were just so many crazy things that happened. I think more so than 2018, 2019. Like in that period, people just looked at it and they're like, this shit's dead. Like these were a bunch of idiots that, made some money and then lost a bunch of money, and I'm never touching this stuff again. Meanwhile, a lot of people are just grinding through it and building. And then 2020, 2021 happened, and it was pretty sick timing. And then on the flip side, in 2022 and 2023, it was just like, blow up, blow up, blow up. And that was kind of existential in nature for many, for many things. So checking out some of these comments, some OG bags in there. Honey Miner, shout out Honey Miner, Made Safe, Neo. Yeah, I mean, it's also funny just to see how much like the industry has changed. I mean, even since I used to make these videos, like I hope I'm smarter. I think I'm 10 times smarter than I was back then. I have 10 times less people listening to me, which is maybe a good thing, maybe a bad thing. Who knows? But, it was like 27, like I was just, and I still am just figuring it out. And I think you always have to maintain that level of humility in this space, because if you don't have humility in crypto, you're going to get humbled you're going to get humbled, whether it's real quick or it's a little bit later on. Like if you're not a humble person, like you're going to get your ass slapped hard by something, whether it's something blowing up, a rug pull, like whatever the freak it is, like your ass is going to get humbled. And so I think that that's an important thing too. And also something that I've learned just in general is really just to not I like to be snarky and I like to have fun, but just to not be an asshole to people, because if you're an asshole, people are going to celebrate on your downfall, and that's, I don't want that to happen. I'm going to try and avoid that happening. Red Fox Crypto, did I travel to the past? A crypto happy hour? Holy shit. No, you didn't. It is January 30th, 2024 at 5:55 p.m. Eastern time. And Yes, it is Crypto Bobby. Yes, I have a little bit less hair than I used to have. I'm a little bit older than I used to be, which I think makes sense because, yeah, I think that makes sense. Because I'm not a time traveler, although that'd be kind of cool. But yep, it is a crypto happy hour, and you have not traveled back in time. Still just as handsome. I try. I swear too, these are actually like Athletic Brew. If you want to sponsor my crypto happy hours now with the 50 viewers that I get instead of like the 1,000 that I used to get sometimes, if you want to, Athletic Brew, if you want to sponsor, I actually enjoy the beers. That'll be my only sponsor, my non-alcoholic beer sponsor, because I enjoy drinking it. And it makes me pretend like I'm actually drinking a beer during the week, which is nice because save it for the one night in the weekend where I'll drink. If you all have questions, let me know too in the comments. Just sound off and I will answer those questions that you have. Again, we've talked through some things thus far. We have gone through GBTC and them losing some dominance in terms of volume. We've talked about the Ethereum spot ETF, sizing your portfolio gains, things of that nature. Is there a buffalo chicken wrap on the street? I actually might have some buffalo chicken for dinner, but I don't know if there's one on the street. But yeah, I think I might do some buffalo chicken for dinner. Not a wrap. I think it's a buffalo chicken bowl that my wife got me. So shout out to my wife for getting me a buffalo chicken bowl because I appreciate that. So some interesting things too. Red Fox started in 2017, 2018. Did cloud mining back then. And then got into actual GPU mining. I think there's some interesting and cool things that are happening in regards to GPUs for AI right now that I think is worth paying attention to. There's some, speaking of airdrops, I think there's some potential ones. There's some stuff going on Solana right now where you can rent either computing power or you can rent GPU power to people that are doing AI computation and earn money, and I think probably position yourself potentially to get a token at some point in time. But I think that's one of the things that's kind of been interesting. I have a couple GPUs that I actually haven't used at any point in time really recently. But yeah, I think it's definitely one thing that is pretty interesting to think about and to see over time. Christopher, I pulled my funds from BlockFi and Terra, cashed out, saved a small amount to restart on Celsius. Yeah, I mean, just the level of craziness that happened in 2022 was pretty absurd. There's just a ton of really like established companies that just went to the shitter, and it was unfortunate to see because I also know a lot of people that worked at those companies. I frankly worked with BlockFi, like Proof Talent, like we supported hiring and still support hiring in the crypto space. We helped BlockFi hire talent. We helped Terra hire talent. We helped Celsius hire talent. So apparently I was the kiss of death in 2022 from a hiring standpoint. But yeah, those were all disappointing to see because there were a lot of good people that worked there. And, I think some bad decisions probably from the top down led to a lot of those individuals losing their jobs. So pretty unfortunate in general. Eric says, what is your crypto outlook for 2024? I'm positive right now. Like I've been positive, and I think, I don't know how many of you watched I don't know how many of y'all watched the video. So I recorded a video, I think it was last week, when Bitcoin was at 38, it was just under 39 at the time. And there was a lot of bearishness on the timeline because of Greyscale and all the GBTC outflows. It was like $500 million, $600 million, all these outflows from GBTC and a lot of negativity. And I basically said, I don't care about any of this shit. Like I'm just bullish on the space right now. I'm bullish on, if you can remove yourself from what's happening in the short term, I think that there is ample reason to be bullish. And I think that's kind of obviously changed over the past few days because what has happened with, I think what has happened with a GBTC slowing down, but also just optimism in the other ETFs, as well as people just not giving a shit, I think, anymore, which is good, and not like the fear around that. But so for me, yeah, I'm super positive on 2024. I mentioned it a little bit earlier, but I think everything is really lining up perfectly. You have two of the largest asset managers now in the world, in the US in particular, too. You have BlackRock, which is like the big daddy of everything, essentially, is likely going to have the largest Bitcoin ETF, and the winning Bitcoin ETF, and Fidelity is right behind it. So BlackRock is now, and Larry Fink is now a spokesperson for Bitcoin, and I think he's going to continue to dominate that space. So you have this ETF, you have Greyscale slowly losing relevance, GBTC slowly waning away. You have Fidelity and BlackRock now, kind of the big daddies of the ETF world. That's a positive. That is, like, there is undoubtedly, if you are a non-crypto native person and you want to get exposure to Bitcoin, or if you are a institution or whatever, the Bitcoin ETF is a phenomenal product. Like IBIT or FBTC, you're getting Bitcoin exposure at a 20 basis point fee. Like that's good. Like it's a good product. And so there's that. That's good. And then in addition to that, you have the Bitcoin halving coming up in April. It's not like an immediate thing where it's like the Bitcoin halving happens, then boom, all of a sudden everything is roses. But it's a good thing. Whether or not it means anything from a supply and a stock to flow standpoint and all that type of stuff, whether or not it actually means anything on that front, it is a narrative play, and it is important for that. And it historically has always made a difference. And so, yeah, I think historically, just past looking at it, I think it's important. And so there's that. And then I think if you look at the macro backdrop of things as well, where the Fed is going to have, like, inflation is down now. Inflation is sub 2%. If you look at Trueflation, if you look at all these numbers, like, inflation is down. Is the Fed going to, like, the Fed's done raising rates at this point in time. It's just a matter of when they cut. And so I think that, like, that is an important thing. I've learned in my crypto time, I guess, to not fight the Fed because I thought I was smart, and I just got my doors blown off just holding through all that type of stuff. So I think that's another thing. So I'm positive. I think, like, the actual stuff with Bitcoin is important. That's a positive. You have the halving, and then you have just a positive macro environment. I think it's all legit. So Big A says, beyond BTC, what are your top 3 high conviction plays for the next 6 months? So yeah, it's a good question, and I think it really depends on, like, where you are in your risk tolerance. And I almost think that there's, like, specific segments that you want to take into consideration, as well as, like, how you want to position and what you're positioning for. Like, it's hard for me to, like, recommend 3 different plays or something like that. For me, I mentioned it before. I like my one of my high. I'll mention the one high conviction bet that I mentioned earlier because I've talked about it on Twitter too. But I like Chainflip right now, or Flip is the token. And why I like it is because I know DeFi fairly well. Like, I know that cross-chain space fairly well. I was pretty early on Thorchain and Rune, and did well with that. And so I've watched that ecosystem grow. It's been pretty cool to see. And so for me, I like Chainflip because it is, I'll tell you the good and the bad. Chainflip right now, it's like $100 million market cap coin. Thorchain, I think, is like $2+ billion. So that's a huge disparity. Chainflip is not yet fully launched yet. So there's not a lot of people that are, like, talking about how it can be successful, or, like, the numbers, because there's nothing to really, like, the numbers they're not notable at this point in time. It's done like $2 million in volume over the course of a month. It's just not notable. And so there's not a lot of, like, real conversation around it. And just from looking at the tech and seeing how it's structured, I think that there is a chance that the way in which the liquidity is structured on something like Chainflip, where they use a system called just-in-time liquidity, as well as they use a USDC base pair, which I think is also important. I think that it has the potential to compete with Thorchain. Do I think it's going to overtake Thorchain and Rune? Probably not, because it has first mover advantage, but can that gap close from 100 million and 2 billion to maybe, 100 or like a billion and 2 billion or a billion and 3 billion? Yeah, for sure. Like that gap could close, or, Flip could have a nice catch up trade based upon that. And so there's some other components there that I think about. The one negative, and I think this is true with a lot of the bags that you want to think about or look into, is the circulating supply versus the fully diluted value, where a lot of projects that have raised in 2020 or 2021 or 2019 or whenever they raised money and that vesting cycle starts, like for Chainflip, I think it's 25% or so is circulating versus the fully diluted value. And so you're kind of, when that vesting happens, like the big vest is in like a year or so. When that vesting happens, you're kind of hoping that early investors, if they're up a ton of money, are not dumping on your face. And so that's something to always, I guess, think through. Like, that's the only thing I don't love, because frankly, like, I think in most cases, like, I have stronger hands than some of these early investors. I just do. Like, I'll hold through this shit, through anything, and these people just, yeet out at the first sign of anything bad, or the second they get their distribution from the team, they're just immediately dumping it. So that's the one thing that concerns me a little bit on whether it's Flip or any other token with a high or with a low circulating supply to FTV, is just, when is that vesting schedule? Who is vesting? Like, are they prominent venture investors, or are they just kind of random seed investors, or like influencers, some stuff like that? Whatever, I don't know. But that's kind of how I think through that a little bit. But for somebody else, thinking about what your like high conviction plays are for the next kind of time, I think that there's a lot of interesting narratives. Solana has definitely, and like, I don't know if I would like, I don't have a problem with Solana at all in terms of investing in it. But Solana's ecosystem has been nuts. And, nuts in a good way. Also, like the shit that was going on yesterday, or it was like AMC coin, GME coin. There's like probably one dev just absolutely cranking through these things and ripping just random ass coins. But so there was that kind of happening. But Solana has just like absolutely crushed it over the past 6 months, which has been good for them. And there's a lot of people that I think bought low this cycle as FTX and whoever else was kind of dumping. And I think you have a new kind of crop of Solana maxis, which is pretty cool, to just like having a new hardcore group of people that have been hardened by some shitty times and are now sitting on some nice unrealized gains. So that, I think, like that entire, I don't know if that's necessarily a thesis or a high conviction play, but I would explore the avenues around Solana and the tokens that are there. And so whether that is AI or DePIN plays around that, I think that's another thing too. Like, I think a lot of people now are talking about the convergence of AI and crypto, and like what that actually means. Is that maybe fluff and total bullshit? Yeah, maybe. Is all this value maybe going to just accrue to like NVIDIA and some chip makers? Maybe. I don't know. But I think that could be an area where, like, even if it's not something that fully delivers, it could do quite well. I've just always liked DeFi. I feel like that's like, for me, that's going to Chainflip. Like it's a DeFi product. It's a cross-chain product. It's cross-chain swaps with Bitcoin, native Bitcoin or spot Bitcoin. So I really like that. But I wonder too, like, part of my brain is like, you know what? People were in on the DeFi season in 2020, 2021. Is that still going to exist this time around? Or are people done with it? Do they just want to buy some random meme coin or some random AI coin? I don't know. Derek Garcia, are buffalo chicken wraps still your favorite, or is another kind taking its place? Welcome back. Yeah, I still love buffalo chicken wraps. They have a special place in my heart. They always will. I love buffalo chicken, whether it's buffalo wings or buffalo chicken tendies, or I just love buffalo chicken wraps. There's also a place now that I get a buffalo shrimp wrap from, which doesn't sound that great, but the buffalo shrimp is fucking banging. So I really, I'm all about it. And you throw buffalo sauce on like anything, and I'll eat that shit. Trust me. Daniel B, we just want to buy random pictures of rocks on a blockchain. Yeah. That's the the NFT gang is it's something else. And that's funny too, because like I suck at NFTs. I'm the least cultural person in the world. I own one NFT, or I own a couple on Solana, but one real NFT, and it's a Pudgy Penguin, and that's my like main NFT. And I bought like the Pico top of Pudgy Penguins in, I think it was 2021. I bought the Pico top. And I just basically forgot that I had it. And now it's worth like 50 grand. I'm like, oh, that's kind of cool. Like, I'll take that. Javier Rodriguez, holding any ADA this cycle? No. I'm not a big Cardano guy. That said, old me would go on some stupid rant and would like, this is 27 or whatever. If this is a little bit later, maybe not 27, because in 2017 I did pretty well with Cardano, but old me would bash ADA and Cardano and say a bunch of negative shit about it. Frankly, if you like Cardano, if you're bullish on Cardano, I don't give a shit. You know, you're gonna buy that and you're gonna hold that regardless. It's not my cup of tea at this point in time. I don't have any interest in it. I also think that there's probably like more interesting L1 plays out there, or even L2 plays. Like, I think there's more interesting, like newer tech that could be appealing. But again, like I'm not going to sit here and bash it because I just don't have the mental energy anymore for that. And I just feel like it's negative and it's a shitty thing to do. So I'm not going to do that. So, but no, I do not have any Cardano at this point in time. I got a zero bagger on ADA. The real buffalo chicken, or excuse me, the real buffalo sauce recipe, Christopher Abbott, is all you need to do to make some sick buffalo sauce is you just take regular Franks, you put a little bit of butter, and you put a little bit of white vinegar, and you mix that up, sprinkle a little cayenne pepper in it, depending upon how spicy you like it, and that is some really good buffalo sauce that will knock your socks out. Somebody said, Big A said, ADA's time has passed. It was supposed to be the better ETH addressing fees and speed, but now L2s, AVAX, Solana, etc. already do that. Yeah, I mean, I like generally speaking, and it's not for me to pick on Cardano or ADA or ADA holders, because frankly, I don't care. But I think there is something to be said about like the new shiny thing in crypto. I think that's one thing. If you're talking about like from a thesis standpoint or just anything, I think that you have like people in the crypto space, wildly short attention spans, which can be challenging sometimes because like you might be right, but if you're early on being right, or if people aren't paying attention to what you think is correct or your thesis, and they're just dancing around trading like meme stock ripoffs on Solana right now or whatever, like your bag is gonna like just kind of chill and not do all that much. And so I think there's something to be said about buying the shinier, newer narratives of what could be. And that's also why like the AI stuff is kind of interesting, because that is a little bit of a shinier, newer narrative. But even then, if you're talking about like L1s or L2s, there are like a lot of these newer ones that are coming out and they're capturing a lot of mind share. And is that making some of the older ones move to the back of the pile? Like, who knows exactly how that'll work. And even like when you think about Cardano from like 2017, like that took an absolute dive after 2017, but still pumped again really hard in the last cycle in 2020 and 2021. Like it still ripped. So it's not to say that something that pumped the last cycle can't pump again. Like it certainly can. And that is definitely a possibility. So yeah, I mean, I try to think about too, like when I look at these narratives, what is most interesting to me and what can I kind of hold steady on while people are going nuts. Talking about conviction again, like I think you need conviction because it's also very easy to play it's like very easy to move from one narrative to the next narrative to the next narrative. And I think, frankly, like there are the people on Twitter that like have a ton of followers and they might be damn good at this stuff. And they're kind of like let's say they're like the tastemakers in crypto. And I think that's in some cases probably like a fair and accurate description of what they do. They kind of, moving markets isn't the right word, but they can somewhat accurately paint narratives or even drive the direction of narratives. And I feel like a lot of times people can get caught up moving from one thing to the next thing to the next thing to the next thing and trying to catch those, like whether it's seasons on different blockchains or whatever it might be. Like it's very hard to go from one thing to the next thing to the next thing and just crush it every single time. And it might seem like some people on Twitter or wherever are doing that. In reality, some people certainly probably are, but I think many people aren't. And so for me, like anytime I try and do that, I'm usually late to the party. And so I like to do my best to find out like what sounds good to me and what people aren't necessarily talking about as much yet, and then make my moves based upon that. That's kind of been my general outlook on things. If anybody has any questions, again, feel free to shout out in the comments here. I'll answer a few more. And then speaking of buffalo chicken, I will go and have my buffalo chicken bowl for dinner. So get a couple more questions in here if anybody has any, but shout out to everybody for those questions as well. Christopher, Eric, Big A, Javier, Daniel, Mike, Derek, Red Fox, and a bunch of other people that I haven't scrolled up enough to see, but shout out to all you for that. Paul, shout out. Appreciate you being a fan since 2017. What do I think about Chainlink? Best of luck in 2024. I'm not up to date as much on Chainlink as I probably could or should be. So as far as like a specific opinion on the token itself, I don't really have one. But the community and the longevity of Link, I think, is pretty unquestionable at this point in time. And it's even funny talking like, so my day job is still, I run Proof of Talent. We are a recruiting company in the crypto space. I can't tell you how many times I've talked to people, hiring managers, CEOs from companies, and they're looking to hire somebody. It could be a CMO or a community manager, head of community or marketing manager, whoever. And the example they always bring up is Chainlink. They're like, I want somebody that has done something like Chainlink or can do something for us like Chainlink. So it's interesting that it's still kind of like the golden standard for community out there. Like the Link Marines, they don't fuck around. And so I think there's a lot of longevity there. As far as like the actual tech advancements, I think they seem to have basically been doing nonstop dev. I just don't know all that much about all the different advancements that they've had. So I can't speak one way to it or another, but I think the longevity of it certainly can't be questioned. Javier says, speaking of DeFi, did you get an injective before it ripped? I did not. Unfortunately, I have zero injective. And then Daniel says, what do you think of XRP? So, I mean, for me, kind of similar to Cardano, it's just like something I don't really care as much about. I think, if we're talking about like upside of a coin, like I like something that has a certain degree of upside. I like something that I can buy and like I'll pull up CoinGecko over here. Like XRP right now has a market cap of $27 billion. I mean, that's even if we're ignoring some of the just like the general aspects of XRP that I'm just not the biggest fan of. But for me, like if we're looking at like one of the biggest things, XRP has a market cap of $27 billion. What is the chance that I can get a 10x on XRP and it goes to $270 billion in market cap? I'd say pretty limited. Like I'm not going to say zero, but the chance that XRP goes 10x is probably pretty fucking low versus the chance of something like my example before of Chainflip that is $100 million right now going to $1 billion and pulling a 10x. That's a lot more realistic to me. So that's also like why I like playing in those areas versus why I'm not a huge fan right now of buying something, especially like it just depends on personal opinion. Like if you like Ripple and you like XRP and you like enterprise blockchain and that's what does it for you, good. I would just buy that and know like you're probably not going to get a 50x on, and by probably
I would say you're definitely not going to get a 50x on Ripple, but that's just my opinion on it. Folks, outside of that, if you enjoyed this video, I appreciate it. Make sure to hit the thumbs up button or the like button if you're new here. I think most everybody's from 2018. Shout out to you for rejoining. I hope you enjoyed. Try and get back and do some more of these. This is the second one I've done since I've been back. Also, if you are watching this now, I have a couple other recorded videos that are from the past few weeks. So if you want to go back and watch those, feel free to check them out. Outside of that, I really appreciate the time, everybody. I hope you have a wonderful evening if you're watching in at night right now. And thank you so much. Crypto Bobby signing out. Have a good one.